Well, howdy there, folks, and welcome into this video. Hope you guys are having a great day out there. As always, a rare Sunday video coming for you here today, okay? We're going to talk about a stock that is doing unbelievably well for us so far, and I want to kind of go into what is going on with this stock, why is it performing so well, and talk to you guys a little bit about this stock and show you some different things, okay? And by the way, welcome to a new set in the house, okay? I have like 4 new sets for this new house, still getting a lot of things together. So this one is I call it the celebration of Tesla set here, okay? So we got the Model X and the Model 3 in the background here. So we celebrate Tesla whenever I'm recording in this set, guys. So anyways, hope you enjoy this video. As always, let me know if you own this stock or not, if this has ever been a stock you're interested in, anything like that. I would love to hear from you guys in that comment section. As always, all I ask in return is that you smash that thumbs up button, especially for me doing a rare Sunday video for you guys. I hope you enjoy this. As always, if you want to know more about my private stock group, the private Discord chat, all those sorts of things, check out the first pinned comment down there. Yes, the first pinned comment down there. All right, guys, so first off, where I actually want to start today's video is talking about this boring stock, because I definitely, you know, when I was first buying the stock, right, which I bought this stock in the back half of 2020 and a little bit at the beginning of this year, okay, and no, it's not Walgreens, it's not WBA, okay, this is a different stock actually in that, right, which I got that same response when I bought WBA, but this stock, a lot of folks said, oh, it's such a boring stock, I don't know about this one, and it seems so like lame and all those sorts of things, right, and you know, unfortunate that most of you guys, like, you don't fall into this trap, which is I call it the casino, the excitement trap that some folks get caught up into in the stock market. Because to be quite honest, like, to me, when it comes to stock market investing, I love the thrill of looking for stocks. I love that thrill of finding the next stock. And I love making money. It, like, the excitement, and I don't need, like, to get my juices flowing type thing. And you guys shouldn't either, okay? Like, everybody that's, you know, a subscriber to my channel, you guys shouldn't need that, like, get the juices running. Like, at the end of the day, like, you know what's fun to me is, like, making money and, like, investing money and doing things like that. Like, to me, you know, treating the stock market like it's a casino is, you know, to be quite frank, kind of like disrespectful to, you know, this beautiful thing that we have, which is the stock market, right? And I think most of you guys, you know, that watch my channel, you appreciate that and you understand that, right? But there's definitely like a little thing that's going on over the past year or so, which is like, you know, everybody's looking for the most exciting stock, the craziest story or something like that. When a lot of times, man, the best risk reward profiles you'll ever find in the stock market are in quote unquote boring stocks. And it's like, you know, making money to me is not boring. I don't know, you know. I mean, I'm sure there's some people out there that would love to be like, you know, be like a third string or on like an NFL team or something like that because it's exciting. You're like on an NFL team, right? I'd rather be like a hedge fund manager making like, you know, 50x the salary of that guy or 100x, right? It's like, you know, you're not gonna feed your family with excitement. You're gonna feed your family with money, right? So that's the way I kind of think about it. Maybe it's the whole like Dave Portnoy thing. Like I don't know. Like there's definitely you know, kind of like vibes out there in the market recently about some people just trying to treat it like a casino and like it's basically a form of gambling. And what I'll say to that is come to my city, man. You want to gamble and have fun? Like come to my city, man. We went down the strip last night, went to see that new property, the Resorts World or whatever. Went down there with like $300 and that was fun. And like if I go to gamble, I go with $300 and that'll get your juices flowing, man. We played the little horsey game. We played some craps and somehow I won money, which I never win money at the casino. Very rare. Must be because it was a new casino. But like if you want that thrill, that like, oh yeah, like come to the strip, man, or go to Macau, like go to Vegas, go to Macau, then you can go get your little fix in, okay? The stock market, you know, that's serious business. That's the way I always treat it. I go to the strip, I take $300 with me cash, I lose the $300, I'm done, right? I go invest in the stock market, I might invest $3 million tomorrow. Like, you just never really know, okay? So, this stock up here is Dropbox. Such a boring stock I bought, okay? And, yeah, we're off to a pretty darn good start so far. And congrats to anybody that owns this stock. And, you're probably doing very, very well as well, okay? So far, we're up to a over, you know, 6-figure gain. This is in my main private account here. And I'm going to show you in detail the tax lots and everything. So, yeah, over $100,000 profit so far in that one. And then this This is in the public account, sitting at a $53,884 gain in this account here. And then, I own another one or two accounts as well. So all total would probably up $160,000, $170,000 plus on this quote-unquote boring stock as of right now. Like I said, to me, making money is not boring, but, hey, everybody's got a different opinion, right? Okay, I think you guys know what I'm talking about, okay? As far as the shares go so far, okay? So this is the ones I bought in the public account, all right? So in this one, I actually started buying back in August, right? Added more in September, more in November, okay? And just kept adding shares. And it looks like in this particular account, the lowest I got was 1844. And we're going to get into exactly what's going on with this stock, which there's some very interesting things going on with this stock, okay? And where I think the stock's going and things like that. But yeah, 1844 is the lowest I got it at there. And then this one is my main private account, which usually the position sizing in the main private account is always going to be bigger than public, since main private has, significantly more money in it, right? And this one, we started buying also August 17th in this one, bought more in September, more in October, more in November, and then this one even bought another $90,000 worth in January, okay? And at that time, it had gone up quite a bit already at that time, 2172. And this was the toughest one. This was the toughest one for me to add when it was the 90K. And the reason this one was the toughest one for me to add was because it had already started going up a lot. Most of the shares I had bought were at $18, $19 a share, right? And now we're talking about it was almost 22. So this was a tough one for me to kind of, swallow my pride and make that last purchase. But at the end of the day, I looked at the stock and I said, $20, $21, $22 is like a slam dunk for me. It's like Shaq under the rim. He's about to slam dunk, right? That's how I felt in regards to this one. And so, yeah, needless to say, we ended up, making that move. And I'm definitely happy I did, because we're up already 25,000 plus. And I think this is honestly just the start of kind of the gains for this one, okay? Now, I want to talk about some interesting stuff going on with this stock and kind of what I foresee happening and things like that, okay? I haven't been talking about this one very much for the past, several months now, okay? And so when it comes to Dropbox, it just literally hit its 52-week high pretty much. Look at volume. Look at volume on this one. Just on Friday, 7.7 million shares traded, right? Average volume is 5.6. So volume's picking up in this one. Clearly, there's a big demand for, buyers and sellers out there, right? Because if there's that many buyers, there's got to be the same amount of sellers out there at least, right? So there's definitely a lot of activity picking up in Dropbox. Part of that could be, 52-week high. It attracts more folks. Oh, it's kind of turning into a hot stock. What's going on here, right? It's performing really well. And if you look at the market cap of this one, just under a $12 billion market cap for this particular stock. I've always viewed this stock as a $20, $30, $40 billion company down the road. And when I say down the road, I'm talking over the next 3 to 5 years. I'm not talking like 10 years from now. I'm talking, within the next 3 to 5 years, I've always seen this company as being a $20 billion market cap to maybe a $40 billion, if not a little more than that, depending upon execution for the company. And if you look at, basically, a 2021 chart here, yeah, it's been a good 2021 for Dropbox so far here, okay? Look at that forward P. This is what's always, in the stock market for me, it's all about risk reward, right? Risk reward runs my entire portfolios. This has always been kind of what's been the most important to me for the last decade plus, and still to this day, it is the most important thing for me day in and day out, okay? I care about the risk reward. How much risk am I taking in this stock? What's the chances I lose 50% or more of my money in the stock over the next 3 years? What's the chance I 2x or more my money of that stock in that stock over the next 3 years? That's what's important to me, okay? And that's what I honestly care about. And so if there's an extremely low probability that I lose 50% plus of my money over the next 3 years, and extremely high probability that I 2x or more my money over the next 3 years in the stock, then I'm going to invest heavier and heavier. In a stock like Dropbox, a perfect example of a stock that I saw extremely low risk probability of me losing a bunch of money and extremely high probability that I 2x or more of my money. So which obviously means, I think there's ways to go because we're up 50 whatever percent now, right? But look at the 4P. I mean, even after this run it's gone on, it's still incredibly low forward P. I mean, forward P in the market in general is, just maybe a teeny bit below this, right? But here we are for Dropbox, which is a company that's been growing a ton and has a magical business model we got to get into and some specific things going on with it over the next several years that mean this stock shouldn't be trading anywhere remotely close to this. I mean, the forward P in the stock should be in the 40 to 70 range. 40 would even be arguably low for this sort of business model, and this type of growth this company has, in my opinion, moving forward. 70, then you start kind of pushing up for this sort of business model, because not all business models should command the same premium. A business model like Dropbox should command one of the highest multiples you're going to see in the stock market because of how special their business model is, okay, which we're going to get into in just a minute here. If you look at percent held by institutions, look at that number there. Over 88% of the float is held by institutions out there, guys, okay? Also, short percentage, very interesting, 9.4%. So this is not one of those stocks that where shorts want to jump all over and want to play that sort of game. It doesn't mean maybe someday it is, but as of today, it has not been that sort of stock. Because, once again, it's a quote-unquote boring stock. It's not going to be that attractive of a stock for short sellers. Because think about it like this, right? What do you have to gain by shorting Dropbox? Their business model is beautiful. It's not like they're going to likely lose clients anytime soon. Very, very profitable business model. Not a high valuation on this. And so if you're a short seller, like I'm surprised it's even 9%, but it's certainly not a high number, because most short sellers are just going to look at Dropbox and be like, why? Why would I want to short Dropbox? Like, it's just, of the stocks you could short out there, Dropbox just does not look like one of the best ones to short. Let's just put it that way, okay? And so very, very interesting. The institutions love this one, okay? And the short sellers certainly don't love this one, okay? Now, when it comes to our business model, we got something very, very specific to get into in just a minute. Getting low on power, okay? Sticky business model, right? Their business model, extremely sticky. I mean, once they sign up a new client, the clients usually are not leaving them, okay? It's a needs-based business model. I mean, we're talking cloud, we're talking e-signing of documents, these sorts of things, right? This isn't like a want business model. This is needs-based, right? Basically, they have no client customer concentration at all. No customer concentration, which is a beautiful thing for the business model. It's not like they get 25% of their revenue from one customer or something like that, and you're like, man, if they lost that one customer, it'd be trouble. No, if they lost a client, it's big deal. We have millions of others to choose from out there, right? Very, very profitable business model that looks like it's on its way to just becoming more and more profitable, actually exponentially more profitable over the next 3-5 years, and a very low valuation. I mean, you can't find this in many stocks out there. Like literally, I don't know if I can think of another business off the top of my head that has a very low valuation, is extremely profitable and expect to get much more profitable, has virtually no customer concentration, is a needs-based business model, and is extremely sticky. Very few come to mind. Let's just put it that way when you think about having all those sorts of things. And that's why this stock should come in a forward P of 40-70 range, easily, in my opinion, versus kind of where it's been trading at. So yeah, this is to me, this is an exciting stock. I mean, I don't know, maybe some people are like, it's boring. To me, this sounds exciting. That's all I'm going to say about this, okay? Now look not a lot of news in regards to this stock, right? You look up Dropbox news on Google, look at this, 3 weeks ago, 1 day ago, 2 weeks ago, right? A lot of the news is weeks old. This is, once again, this is not a popular stock, right? Not a exciting stock. And so you're not going to get all this news and craziness coming out. But man, does that matter in the end? To me, it doesn't. All I care about is making money in the end when it comes to the stock. Making, hopefully $250,000, $500,000 plus in the stock. That's what I care about. I don't care if it doesn't have any news around it, right? Look at this. This is very, very important, okay? Elliott Management amassed a more than 10% stake in the cloud computing and file management company, making it the largest shareholder behind Dropbox co-founder and chief executive Drew Houston, according to sources familiar with the matter. While the $40 billion activist hedge fund's plans for Dropbox are unclear, analysts see opportunities for the company to improve its stock price, right? Which is, ever since this company went public, stock price has never been in a great place. And that's one of the opportunities I saw. I love seeing a stock that has gone nowhere. Meanwhile, the business has made great progress. Because if you look at this company, since IPO, they've made tremendous progress, and the stock price didn't do a thing. Remember those guys back there? And I'm not saying Dropbox is the next 1,000% plus gainer, because I don't think it's that sort of stock. I don't think it's that sort of opportunity. But remember Tesla, they made all that progress for 5-6 years. The stock price did nothing, right? We see Dropbox here, stock price did nothing for years. It's finally starting to move up. Meanwhile, all over those years, Dropbox made incredible progress with their business. Look at their revenues, look at net income, look at how many customers they have. Look at their total TAM now versus when they went public. It's all night and day for this company, okay? And that really, really excites me with this one, guys. So yeah, needless to say, I'm not selling Dropbox anytime soon. I'm going to be a happy holder of that. Anybody that's making money from the stock, congrats to you guys. And let me know what your opinion is on Dropbox in the comment section. I'd love to hear from you guys as always. All I ask in return is that you smash that thumbs up button if you didn't already for this video. That helps out huge in the YouTube algorithm. I appreciate all you guys for being here. Much love as always. If you want to know where I get 75% plus of my stock picks, check out second pinned comment down there. Much love as always, guys, and have a great day.